Lots and lots of questions about the market situation. I said to myself, maybe it's a good time to do monthly market updates. That way we are all on the same page. Today we'll be talking about January 2022 market update. Back in December 2021, Fannie Mae had predicted a 7.9% increase in median home prices between the last quarter of 2021 to the last quarter of 2022. This is a historical shift from 4.1% annual growth since 1987. Fannie Mae also predicted we would see a shift in a 30-year fixed mortgage from 3.1% to about 3.5% within the same time period of quarter 4 2021 to quarter 4 2022. The housing giant Zillow had predicted in December of 2021 an increase of about 11% in home prices for the same time period, last quarter 4 of 21 to quarter 4 of 2022. By mid-January 2022, Zillow said, hold on a minute. I think our numbers were too conservative. Zillow now changed their predictions from 11% to 16.4% for this same time period. 6.57 million homes to be sold in 2022 as regards to about 6.14 million homes sold in 2021, which represents about a 7% increase in home prices. According to Zillow, if we're talking about a 7% increase in sales in 2022, if we're talking of a shift from 6.14 million homes sold in 2021 to 6.57 million in 2022, then what are the potential risks here? Inflation. Of course, some people keep asking if we're in an inflation. We are in a housing inflation. The Federal Reserve in January had indicated they would take measures to try to redress the current market situation. January 19th, for 30-year fixed mortgage, the interest rate rose from 3.1% to about 3.5%. And this is a historical shift since spring of 2020. These low rates have been primarily responsible for the housing explosion. Of course, with the Federal Reserve trying to address this inflation situation, it will have an impact on sales volume, because with increasing interest rate, buyers and sellers may be discouraged. So it may affect these numbers. Also, in January, The Federal Reserve had indicated it intends to raise interest rates in order to take care of the current inflation rate. The Federal Reserve had also indicated it would take more aggressive action as needed to solve these inflation issues. So as we move to the last month of the first quarter in 2022, do not be surprised to see an increase in interest rates. And you will see even more increase as we move towards the second quarter. Let's look at inventory. January 2022. The pandemic actually caused inventory to dip to its lowest in 4 decades. Most people were sure that we were heading for a housing crash. This was even more evident when the forbearance moratorium expired. That was in September of 2021. Every discussion in every corner was about a housing crash. Forbearance moratorium under the CARES Act as part of trying to give Americans a break due to the pandemic. It expired. Instead of the crash, what happened? Fannie Mae comes out with this bombshell and says, wait a minute, we are looking at a 7.9% increase in median home prices within the last quarter of 2021 to the last quarter of 2022. Another housing giant, Zillow, they came out with their own prediction of 11% increase in home prices for the same last quarter of 2021 to the last quarter of 2022. That was in December. Mid-January, they say, oh, hold on a minute. We were too conservative. We need to increase our numbers. We are now talking of 16.4% increase in median home sale prices. Looking at the stats, do you think we are heading for a crash? I don't think so. The Federal Reserve is very vigilant, and they're doing everything in their capacity to try to address the situation with the current inflation. We will see more increase in interest rates. Affordability will become more difficult, but I don't think we're going to find ourselves in a housing crash. So looking at these numbers here, you are still in a better situation if you buy, because we always say in real estate, the best time to buy was 5-10 years ago. Let's look at the inventory situation, January 2022. When we talk about the inventory, we talk about the existing homes that are out there in the market, ready to be purchased. We are now at a very low inventory as compared to 2020 and 2021. January 2022, we are at a 40.5% lower inventory compared to January of 2020. And we are at 19.5% lower in inventory compared to January of 2021. Based on our low inventory count, it is still very clear we are in a seller's market. A seller's market is a situation where there are very few homes, existing homes, while there are too many people looking to buy. Let me break this a little bit. Let's talk about, let me put it this way so you can see. I think it will make more sense this way. Okay. So we'll talk about a seller's market. We'll talk about a buyer's market. And then we'll talk about a foreclosure market. Let's look at Texas inventory, for example. In order for us to be in a seller's market, we need to be in a market situation from 0 to 4 months of inventory. In Texas, we are about 1.4 months of inventory now. In order to be in a buyer's market is a situation where there are actually more houses in the market than there are people to buy. That's a buyer's market. We need to be at 5 to 8 months of inventory. And in order to talk about a foreclosure market, we need to be at a 9 to 12 months of inventory. So looking at the Texas market, we're here at 1.4 months. So you will realize it would take us a long time for us to get to the foreclosure mark. So when people keep asking if we're going to have a foreclosure, my answer has always been no. But somehow the market will shape itself. Given that the Federal Reserve is trying now to put in aggressive measures to take care of the market volatility, to take care of this inflation, what will happen the last month of the first quarter 2022, and as we move towards the second quarter to the third quarter 2022, we will see there may be the market forces of demand and supply may shift due to the increase in the interest rate. But we will not find ourselves in foreclosure. This has been an update from your coaching partners at C2C Mentors LLC. We bring you nothing but the best in real estate education. Make sure you subscribe to our channel so you can get more updates, and see you next month for our February market stats. Thank you.